Ladies and gentlemen, please welcome to the stage founder and CEO of ArabNet, Omar Christidis, and his panelists.
Thank you. Hello, everyone. Welcome. I know it's the after-lunch session, so I really appreciate that you're with us here today. And we have some incredible global leaders in the payment and financial technology space with us. We're going to be discussing the People's Bank, but really also more broadly, the future of financial services and how it's going to be reshaped by technology. And I welcome my panelists here today. I have with me Amit, the president at Paytm from India. We have Teo, who is the founder and CEO of Pagatech from Nigeria and expanding rapidly globally. We have Ali with us from Tap Payment. He's the founder and CEO. And as well, Jacky, who is the head of investment at Ant Financial from China, one of the largest, if not the largest today, global fintech player. Welcome, gentlemen.
Thank you. Thank you.
And today, the audience, your role is going to be quite interactive. I'm going to be asking our panelists questions, but then I'm going to be asking you the same questions so that we know and you guys can help us keep us honest. And we'll start out first with understanding the dynamics that are shifting in the payment industry today. We're seeing a lot of new types of players. The telecom players are entering the game. In some markets, they've been in it for a while, but here, players like STC are aggressively entering the market. The global technology players, Google, Apple, are all entering into this game. Local switches, national switches are starting to get into the game. So I want to ask our panelists today, who will be the winners and losers when we look forward? 5 years from now, who will still be standing? Tay, you want to start with, we'll start with you.
First of all, thank you very much, and very happy to be here. Look, I think, if you look, I don't think it matters what type of company it is, whether it's a telco or a Google or Facebook, etc. I think more in 5 years from now, the companies that are most innovative and are most listening to their customers are going to win, right? So it's all about, when you think about the problem we're all trying to solve, I like to call it a key exchange problem. And it's a problem that has existed all of time. I have something of value, you have something of value, and we want to exchange it, right? And how do we make that happen? And the way you do that will always continue to evolve. And so I think ultimately in most markets, it's a local game. There are local nuances. And so I think it's people who are on the ground who actually figure out those local nuances that are able to win in those markets. And I think then over time, and this is why I think it's probably going to be a third party, not any of these names you're talking about, a company that is focused on acquiring assets in different markets where people have won local games. That's my sense.
Well, this is very interesting because we're going to come back to M&A, especially with the presence of Ant Financial here with us. Yeah. But Amit, you wanted to add something.
Yeah, if you look at globally, and if you just kind of go back 20 years, we've kind of seen technology evolve in multiple directions here. You've probably seen the browser players didn't really win the operating system war. We've probably seen the kind of the content player, kind of the search players kind of were different, who won the kind of the search war. And we saw the kind of the platform players getting built on the search players, and then you have the content players, which are very different. So on the payment side, while a lot set of players across the ecosystem are kind of coming in, but I'll kind of borrow from his point of view. The key theme here is relevance, and the key theme here is customization. Who's kind of really listening to the customer and offering him a product which is really customized to his need and his requirement. Yeah.
But I feel like everyone's sidestepping here, right? No. Who is going to be the company that's really able to meet those customer expectations? Is it going to be traditional players like the banks? Is it going to be these technology companies?
So look, I mean, I don't think it's that we're sidestepping. I think the fact is the banks that don't innovate will lose out, right? That's for sure, right? But if Facebook is not going to show up in Nigeria and all of a sudden be able to offer payments without the local rails, right? Without understanding the local nuances and the customer needs, they're not going to show up in India and just be able to do it, right? So WhatsApp has shown up in India. That should be interesting just to hear from Paytm. But so I think it's in each market they have their own nuances that are slightly different and difficult for a global player to just win that game itself. Almost look at how Visa and MasterCard have evolved, right? They have global brands, but they have local partners, right?
Clear. Ali, I want to turn this over to you.
Well, I do agree when it comes down to experience and having that last mile touch with the customer. But I believe being, at least, I'm talking from experience from the region here in the Middle East and North Africa, it becomes important to understand the market behavior, the different stakeholders that are within the industry, exactly what's happening when it comes down to who are the users as customers, but also part of those are actually the existing players. So banks are playing a role there, telcos are playing a role there, internet companies are playing a role there. So it could be serving not only the end user, because if you focus on that, you would not know how to deal with all the other players. And one more key player is the regulator. So dealing with all of those industry stakeholders becomes very important to be successful in any market that you go in. It depends again on the region. Some regions you can move faster than the regulator, especially if you are in markets that are, let's say, very heavy with population, and you can move really fast, and then the regulator would come and follow. You see that in countries like China, you see it in India, but when you come down to Middle East and North Africa, we're very much clustered, very much regulated in a very micro level way, because we have a lot of countries working independently. So interoperability is very important. Standardization becomes very important. Knowing how to deal with the different dynamics within the region that you deal with becomes very important. That complementing the user experience.
Excellent. So we have the people who are going to win are going to be local. They're going to have a really understanding of consumer behavior and customer experience, and also be able to deal with all the different players and stakeholders in this market. Correct. But let's ask our audience here today. Who believes that in 5 years the banks will be the winners in this game? Please raise your hand. Oh, no banks, no winners in the banks. There's a lone person in the back saying, okay, what about the technology companies? Who you believe? Google, Apple, okay? The telcos, who says the telcos? Gosh. Nobody. Well, we have a clear answer from the audience. What about independent entrepreneurs, like the entrepreneurs that we have on stage today?
Yeah, lots of
okay, well, good. So we have a clear kind of direction. It's you guys against Google, Facebook, and the big players. And I mean, I guess that brings me to my next question, which is, this space, it seems like a natural monopoly to me, right? There's a lot of upfront investment in infrastructure, there's big network effects, and we already are seeing a lot of mergers and acquisitions in this space. I'm curious if down the line, we will expect all of you to actually end up being one company, right? Will we see the emergence of only a few big global players like MasterCard and Visa, similar to MasterCard and Visa? And I'm going to start with you, Jacky, because you are already an investor in 9 such companies in different markets. So maybe you are the potential acquirer, in fact, of some of the players here on stage.
Yeah, I think first of all, this is not a winner-takes-all market. There will be a lot of new, players come in, and I think I just agree with the other entrepreneurs. I think the local service, the local player is quite critical. You can look at the structure when making investment, like first time we made investment in Paytm. Actually, we have already provided the fund, the money, the infrastructure, the technology, and even the operating experience. But we still think we should have the local team to operate the business, because you will face tremendous, the pressure from the local, regulatory. So we have to follow that pattern, in the rest of the 9 wallets. So we have the local partners to run the company, but we can provide some, technology or money.
Yeah. So really it's about, go back to the need for a local presence and a local market understanding, but a player like you can provide the funding and infrastructure. Amit, you want to add something here?
Yeah, I think I'll probably say it in 2 parts, right? One part is, I think Ant is a big partner for us, and is something that we really look up to, as well as really fortunate to have a partner like Ant, because we get so much access to technology, knowledge. They're just up on the curve itself. I think on your question in terms of consolidation, I think about it in 2 parts, which is there are certain elements of the ecosystem that will consolidate, okay, because they would be utility-like, for lack of a better word, but they would be consolidation as well as globalization of a common platform that would happen. But underlying, alongside that, the adjacency to that is the local aspect, which is there are elements of the business that would get created which are hugely local in nature, where there would be independent local players who would potentially be the winners going forward, because they'll understand the local nuances. They'll probably manage the relationship with the multiple stakeholders, whether it's regulators, the government, or the customers, and have a different level of trust and engagement in the relationship with the customer itself. So I think it'll probably be a consolidation at some level, but they would be also kind of independent spawning of multiple local players who would kind of probably continue to be very successful and keep moving forward.
So you're talking about the rails being maybe owned by one entity or a few entities, but then having a lot of people plug in to deliver different types of services. Can the banks be this rail? Can they provide it? Or
Can the banks be the rail? No, I don't think so. Because they have so much disparate systems, right? So I think one strategy, for example, I mean, from what Jacky's saying, they've invested in, like you said, 9 different companies and have provided technology. One idea could be that could be one rail, right? But there could be another rail. And I think then you talk about interoperability between those, right? So I think you're going to see 2 models. You're going to see that model, which we just described, where Ant Financial, a company like that, has a significant ownership of a company, but is not a majority owner of it and has local partners. To the other model, which I think you see more from the Western payment companies, where they would just buy outright the entire business. And they'll still maintain those teams in that way. But so I think you may see multiple models play out. Yeah.
I'm going to move on to our next question. And what I want to understand now is the challenges facing the growth of fintech more broadly, right? This is one of the most promising opportunities in the digital economy. Yeah. What do you think are the top challenges? Is it regulation? Is it infrastructure? Is it customer trust and customer awareness? What do you believe are the top challenges? And I'd like also to hear from you, Ali, what do you think is unique about the Middle East market, since today that's where we are?
Well, basically, in the region here, it's mainly fragmentation and a lot of clusters of behaviors. When it comes down to consumer behavior, regulatory behavior, even organization or merchant behavior. So education plays a big role there. So it's not only about standardizing the technology, giving an interoperable approach into integrations or standardization in Rails, but it also comes down to the actual behavior and the adoption. That comes inside with the regulation. The more you have fragmentation, the more effort it needs to be put by the, let's say, the innovator or that startup in order to bring and connect them all together in order to result with a homogeneous and market at the end.
Yeah. Look, I think the biggest issue that we face is identity.
Identity.
Yeah, identifying, because of the need to KYC in this business, being able to identify your customers and be able to KYC them properly is a huge issue. I mean, I was in India last year, and I just learned a lot about the Aadhaar number, yep. Right? And the benefit that had brought to the banking system. The banks in India went from costing them $20 to open a bank account to 50 cents, US cents. Now it's faced some legal hurdles in using Aadhaar, but ultimately I think one of the biggest things that countries can do if you want to spur financial inclusion, you want to spur innovation, is really get a good identity system. Identify your residents and give APIs and ways for people to do electronic KYC of customers.
Amit, what do you think is the biggest challenge?
I would say both the biggest challenge and the biggest enabler is the regulatory framework and how the government and the regulators kind of view financial inclusion as a broader objective, and then enabling that with multiple initiatives. Like India, Aadhaar was a big initiative for us on the KYC side and the kind of the customer ID side. We had a big initiative on UPI, which is the rails that the government has kind of created between banks that just kind of enables seamless transfer of money. There is this whole massive push that happened on the telecom side, which has just kind of made internet very, very cheap on devices, and the kind of the whole smartphone penetration. So if there's a kind of big disparity in India today, which is the smartphone penetration is at like 45%, probably going to 75%, whereas the financial services is probably at like kind of still like below 5%, depending on which segment that you're looking at. So there is an infrastructure getting created, there's enablement which is happening by the regulators and the government, which is really kind of helping and giving the tailwinds to a lot of new business models which are coming in. The other point that you touched upon, which was capital, I would say over the last few years, we've kind of seen, I think, Ant is a kind of a good example, availability of both strategic as well as financial capital has gone multifold for the right business models. And I think companies which have really created kind of or are innovative in their own respective spaces. So I think capital generally, which probably be a kind of a big answer like 5 years back, has probably kind of not as big a challenge anymore.
Great. Excellent.
Yeah.
I want to ask our audience, what do you think is the biggest challenge facing fintech today? Is it customer awareness and customer trust? Raise your hand. Okay. Is it infrastructure?
Okay.
Is it regulation? That's the one I definitely expected. Access to capital for businesses? Okay. So we have a few people here that feel a specific pain, but it seems overall it's very clear. The role of the regulator here is really critical.
Yeah.
And we need really progressive regulation in order to drive this forward.
Correct.
I'm going to move on to our next question. And that is to say that many of the players here started out kind of in the payment space, but increasingly, as you've set up this infrastructure, the access to the consumer, there are new spaces and new financial services, adjacent opportunities that you're looking to capture. What do you think are the kind of hottest spaces that you expect to enter into moving forward? And maybe I'll start with you, Jacky. You already have a very large money management fund. You're looking at offering new types of services. Tell us a little bit more.
Yeah, I think in China we have already penetrated about 900 million users in China, which
100 million.
Yeah, we happen to be in China, right? It's a 1.4 billion population, but the internet people is about 1.1 billion. So actually we have already captured most of them. So not only for the payment business, because now in China payment is some kind of a thing business. It's not very profitable, but we should think about to provide more services and solutions to our customers. We start from so-called digital finance, not only the wealth management. We have the largest money market fund in the world, Yuebao, and we have started to help our customers to trade securities, to buy the mutual funds, and we also help them to buy the insurance policy. And also we have the Sesame Credit, is help people to build up the credit to apply to various use cases, and the macro lending for the small business, and the credit, the consumer credit for the consumers. It's a various of different products.
And which of them do you see getting the most traction today? Consumers are really attracted by which ones?
I think at least I should say, the credit consumer, the consumer credit products, it's really attract a lot of young generation. It's a very interesting case. The other day when I work in a grocery store in Shanghai, and the store owner said he has to have, we have a product called Huabei. It's like the mini version of credit card. People can use it, start from maybe $10, then $20. So he said he have to accept this because all the young generation, they will use the next month's money. So if he don't accept this, he cannot, he won't have the business. So I think this kind of product provide us, an opportunity to access the young generations.
Yeah. I'm going to start with Amit, then I'll go back to you. Amit, you also have other services that you are currently providing. Can you tell us a little bit more? And what areas you're looking to enter?
I think it's kind of just taking off from what Jacky is saying. What payments provides us today is a massive reach. It provides us with, I would say, a massive amount of understanding of the customer. So what it does is it kind of enables us to kind of create products, whether it's on the lending side, whether it's on the insurance side, or whether it's on the wealth management or investment management side. Products which are a lot more curated and a lot more relevant for that customer. There is this broader aspect around coverage of the population. Now, India is 1.2 billion people. There are probably only about less than 5% who are kind of formally covered. There are probably like 30% who are formally covered, but there are only probably 5% who are kind of relevantly covered, so to say, right? The kind of the coverage is not adequate, or the kind of the engagement is not adequate enough. So for us, credit business, where there is massive amount of credit requirement, both at a consumer level, but more importantly, a lot of at merchant level, the kind of the small and medium-sized businesses, and with a payments platform, especially that we have on the offline payment side, where we have roughly about 15 million merchants who accept payments through Paytm. That creates us a kind of a very strong flow of both kind of merchant engagement as well as look through of customer kind of transaction data that allows us to kind of give them credit. Similarly, again, the credits that we're talking about here, Omar, is we're talking about credits to merchants which is as low as like $500, and to consumers which is as low as like $5 to $10 itself. Now, creating those sachet-sized products.
Kind of microcredit, really.
Microcredit, sachet-sized products which are more relevant for that customer, that makes a huge amount of difference. And the same probably argument applies to both investment management, and probably something same applies to insurance. To give you an example, we have a platform called Paytm Money, which enables investing into mutual fund products or investment products.
It's a savings product.
It's an investment product. It's an investment product into equity and debt mutual funds. But what it does for us is the payments provides us a much wider canvas. So when we look at that product now, we have roughly about 30% of the consumers on a platform are first-time investors in those products. They've never invested before in investment management product. And the reason for that is payments allows us to reach these customers. They've already created a trust with these customers, as well as the technology makes the cost of delivery to these customers is very low. And these customers generally are probably the bottom of the pyramid. So even if they want to invest, let's say $1 a day, we enable them and provide that platform to do that. So I think this interplay of financial inclusion with customization and then payments driving to deliver a lot of these services are creating a lot of adjacent benefits to us, as well as potentially commercially it makes sense for us to do it, because payments by definition is a a thin and low margin business.
Yeah. So interesting. Here you're saying 40% of people who are buying your savings product have never bought this product before from anybody, not just from you.
Yeah.
They've never bought a savings product before. So this is exactly what we're talking about when we're talking about financial inclusion opportunity for such players. Taya, you wanted to add something?
No, the only thing I'll add, because I think I really agree with everything you've said, the only thing I'll add is then systems like us, when we then open up to third-party developers, it then even creates a lot more opportunity, because then you drive innovation across and let other people innovate, right? So, we recently opened up our wallet. Others are probably going to do similar kind of things where you have the wallet as a service, right? And then it's going to drive innovation, right?
And I think, Ali, this is what you're trying to do, right? Make it easier for startups to be able to build on top of this quite fragmented regulatory landscape, right?
Exactly. Basically, we had to go through it ourselves, dealing with multiple markets. And there's no point of reinventing the wheel. Of course, innovation starts after the rails are put. Once the standardization is already there, and then the real interesting fintech innovations comes behind that. Today in the region, connecting the markets together was an important piece. We focused on that. Now we work with a lot of, let's say, fintechs to innovate and build on top of that really interesting products. And then comes in all the credit risk profiling, and when it comes down to data handling and lending and all of those interesting products that you can do cross-selling, upselling, and lending.
Excellent. So I love that everybody here wants to be in the platform business. Nobody wants to be actually delivering services to, and I understand you are delivering them, but.
No, we'll deliver some of the services. I think it's more a realization that you can't do everything, right? So you have to pick what are the core things that you say you're going to deliver, and I think that's what I heard. Yeah. And then you open up and let innovation happen, and let people come up with other ideas so that they don't have to deal with the regulation, right? You're dealing with the regulation. If you've already done it, why go do that?
So let's ask our audience. How many people here would be willing to do saving with a digital financial institution? Raise your hand. Okay. How many people would be willing to take credit, loans from a digital financial services institution?
Yeah.
Okay. Wow. Okay. So the marketplace is certainly here, right? Mm-hmm. A lot of people a lot of bankers I hear talk about, oh, people don't trust these institutions. Yeah. They'll never save their money with them. They'll never take credit with them. I think our audience strongly disagrees. We have just a little bit of time left, so I'm going to try to squeeze in my last two questions. The future of banks. What will happen to banks in this new era? And we're going to try to do this in 3 minutes. So who wants to take a stab?
3 minutes. Okay, I'll take. You want to go? Go for it.
You talked about front-end banks and back-end banks. So I thought that was really insightful before.
So basically, going back to how we started the conversation, I think the roles are being reshaped. They're reshuffled. That's what's happening. Banks will always have a role. depends whether they want to reinvent their presence to be a front-end provider, or they want to just take a back seat and handle all the cash handling and let a front-end provider deal with that digital technology, dealing and moving things from that angle. This also depends on markets where banks are already heavily present, where other markets where banks are not as present. So regulators within the financial industry will always be there. Rails will always be there. Banks, it depends on their presence. So if you're talking, if we look at the MENA region in GCC, banks have a strong presence. That will remain. Where they were going to position themselves, it depends on how they will collaborate with the new players. When you talk about other regions, such as in MENA and North Africa, it's very much underbanked. If it's underbanked, banks will have a role, but they need to pick up their pace into how they would be wanting to deal with technology companies.
So I strongly do not believe banks are going to disappear.
Okay, clear. That's a very clear perspective.
They're going to be here, right? And I think we just need to accept that. And it just means there are newer players who are also coming in. And I think there's a lot of collaboration that can be done, banks with wallets and other payment systems. So I think though that the bank of the future is a bit different than the bank we see today because money is changing. Right. So I remember about 10 years ago when I told people that I had a vision of no physical notes. You know, some people were like, "Wow, that's scary." And remember back then there was no cryptocurrency, there was nothing, so people could not really imagine that. And I think you fast forward a few years, and you know, the bank is going to be holding cryptocurrency, right? We're going to be holding cryptocurrency, not fiat, right? So. All
You're
of
talking
these
about
stuff
central banks
are
going to issue their own cryptocurrency. Not even that we won't have physical reals anymore.
Correct.
We will have a digital real.
My former boss is already working on this, e-currency. They're going to issue, central banks are going to issue their own currency, e-currencies. Yeah. So the bank will change, and but the banks that innovate and change along with that and collaborate with fintechs will survive, right? Yeah.
Excellent. Maybe then I'll move to my last question, if anyone has anything to add. So if we, again, project ourselves into the future, 10 years from now, what will payments look like? What will financial services look like? What kind of new technologies might be integrated in the future that we might not see today? You guys from your perch up high in this business can see. You want to start, Amit?
Yeah, I would say that the market landscape would be kind of a set of multiple players. I think there'll be banks who will probably evolve through that journey, and I'm quite hopeful there'll be a few banks across the world who actually make that plunge and become from incumbent financial banks to more technology-driven banks, and I think there are a few examples of that already. What I see here is eventually we need to create a model which creates massive amount of financial inclusion both on the consumer and the business side of the things, makes it massively convenient. It's almost like can you get a consumer loan or a personal loan as simply as you can get an Uber, right? And are we moving in that direction? And I see that probably in 10 years out, that's the direction that we should be moving, which is the convenience, and it's highly customizable pricing for each customer. And I think that's where I'm just using loan as an example, but probably across the spectrum of financial services, that's the way where I see things moving forward, and all players in the ecosystem coming together, collaborating in some cases, competing in some cases, just moving towards this direction.
Other thoughts? Ali, you want to take?
Well, the way we're exposed to it today, you have the online and you have the physical. But the future is going to be all merged together, and we're starting to see it. As you mentioned with Uber, right? The rides where it's a physical presence, but you're doing a payment online. There's going to be more and more of that with some kind of biometric authentication. It's happening in China with facial recognition, and you guys are doing a great job with that.
Thank you.
And basically,
pay with your face.
Yeah. I think 10 years is too long to perk it in. Because every 2 to 3 years, there are new technology come out. So I think we should. I can share you something about.
I'll accept 5 years.
5 years. It's still too long, right? It's a lot of different technology come out.
It is too long.
Like, biometric, authentication, we have already done in China. We have so many devices accept the face as the payment method.
Yeah.
Today I don't need to bring cash with me, but in the next two years, I think I don't need to even bring phone with me. I just have my face. It's good enough. And like a blockchain, whether it can be some, innovative technology, who knows, right?
Yeah. I fully agree with that. Actually, that was what I was thinking, is that now when you go grocery shopping, you're just going to walk out, right?
Yeah.
And your face is just going to be scanned and the payment's going to happen. But maybe the only other thing I'll add is that I think 10 years from now, we'll have one country be 100% digital, no cash, no fiat currency.
That's great.
And I'm predicting it's Sweden.
Yeah.
This about brings us to the end of our session. I am going to ask one last question to our audience. And it's a multiple choice, only two choices. Existing banks as we know them, the vast majority of them will survive in the next 10 years or will not survive in the next 10 years. Existing banks. Raise your hands if you think they will survive in the next 10 years. Raise your hand if you think they will not survive in the next 10 years. Okay? Well, I think the audience also agrees with you. The banks are here to stay. And on that note, we'll wrap up our session. Thank you for the panelists, and thank you for the audience.